So today the date is 28th of, sorry. So today the date is 28th of December 2025, Sunday. Time is 11:54 a.m. Today we'll be discussing about breakouts, stops, and retracements. A quick introduction. We'll try to link up all of these keywords, the breakout, the stop, and retracement. Sorry. So why are we into the market? We are into the market for profit, right? The best way to get a tremendous amount of profit is by getting onto a trend. So you know a trend. Trend is a particular direction which market is going. If you are able to identify a trend, if you are able to identify a trend, and if you are able to join it at the earliest, and if you are able to ride it, not just joining it, ride it, and if you know when to stop. So already we brought in the stop here. So when you know when to stop, then you will be able to make good amount of profit. So in between, for example, you are joining a trend, riding it and stopping it. So in between this cycle, you will get a number of developments which you term as retracements. Price will be going up or coming back to certain levels, or it may be going down and coming back to a certain level. So those kind of retracements will be happening throughout this cycle. So we already brought in two areas. Stops we have included here, retracements we have linked up here, so we already know a relationship between them. Now we need to integrate breakout. So where you will put this breakout? First of all, what is breakout? Whenever price is breaking a particular level, suppose this is a level of resistance or support, whatever. If price is breaking this level on either side, we call it as a breakout. For convenience, I call, for example, if a particular level is broken down, I call this as breakdown. And if a particular area, suppose this is a resistance area, price is coming from beneath it and it is piercing through it and it is violating that level, then I call it as breakup. So for convenience, we call this as breakdown. Price coming down, we call it breakdown. Price breaking out to the onto the higher side, we call them breakups. So that is breakout. Breakout is the larger term, and it encompasses breakdowns and breakups. Now, what's the role of breakouts? Actually, it's the breakout that give out trends. After breakout, market get into the trend mode. Not all breakouts give rise to trends. So it is the breakout that gives us trend. So thus these all are related. Breakouts, stops, retracements, all are related, and these all are essential for us to get into it, to identify a trend, to join a trend, to ride a trend, to stop the trend. Now we will look at it individually. First of all, we'll take out the breakouts. We'll learn about the breakout quickly. So breakout. There are different types of breakouts based on the kind of interaction that we have with that particular breakout. First of all, I will list down the number of breakouts that we will be learning. First, we have pure intrabar breakout. Second, we have close filter breakout. Third, we have 2-bar close breakout. The fourth one we have point or percent. point or percent filter breakout. Fifth, we have time-based. Time-based breakouts. Sixth, we have volume-based breakouts. Seventh, we have ATR-based. ATR means average true range based breakouts we have. And eighth one we have is pivot point based breakouts. We'll be discussing each one of them in a quick fashion. So first we will take into consideration pure intra-bar breakout. So what is happening here? Here the trader enter into a position the moment the price ticks beyond a level. Maybe it could be a resistance level or it could be a support level. For example, suppose this is a support. Negative price structure is forming. The moment it get past the level, the trader get into action. He take a PE here. He go for a shorting here or a short. So this is called pure intra-bar breakout. This can happen also on the upper side as well. For example, if this is a resistance, okay. If this is resistance, sorry. Okay, suppose this is a resistance and you have price knocking on this resistance level, and the moment you get a tick beyond this level of resistance, you will get into a trade. So this is a form of aggressive trading. It is a form of aggressive trading. The moment you get a tick beyond a particular level of resistance, you are getting into the trade. It's like very aggressive. The pros of this method is that you will be able to enter at a very convenient price, at a very favorable price. So, and I would say an absolute best price entry scenario. An absolute best price. You can enter at an absolute best price, while other traders may be waiting maybe other traders may be waiting for a clean candle to be formed beyond this level. By the time you have already entered here, that means you got a price advantage. So that's the advantage of this one. As a result, when you have a best price entry scenario, what it means your profit is likely to be very high compared to others. But there are certain cons. This is pros. There are certain cons as well. For example, fake breakouts. The breakout could have been a fake breakout. In that case, price reverses and you will end up in big loss. Loss or big loss. You may end up in loss or big loss. So most often we get fake breakouts, and most often price reverses immediately. It may not give you enough time to modify your stop losses or whatever. So by the time you will be hitting loss. So that's it. Pure intra-bar breakout. One of the important point that we must keep in mind is that though intra-bar breakout method is very aggressive, very risky, it can still be employed in a very highly liquid market, which is experiencing some event, and as a result there is momentum. There is huge momentum in the market because of certain event or certain news that is in place. In such kind of market, we can try pure and rubber breakout, provided there are adequate checks and riders in place, which is the practical side of the trading, and which we will be discussing at a later time, according to the demand. When you guys demand for such practical classes, we can do that. But as of now, it's theory. Fine. And just a minute. I hope that is clear. So, what all we discussed? We discussed the introduction part where we tried to make some kind of linkages with breakout stops and retracements. We discussed different kinds of breakouts, and the first one we took for detailed discussion is pure intrabar breakout. Now the next one will be closed filter breakouts. Actually, you don't have to remember the names as such. Names can be changed. Even pure intrabar breakout, I could say pure breakout. You don't have to say intrabar and all. Pure breakout. Closed filter breakout, you can say closed breakout. It's all your convenience. Maybe I may change the name afterwards, but it's all up to the convenience. But the idea, the concept should be firmly placed in your mind. That's the most important thing. Now we'll be going to the close breakout or close filter breakout. Okay. So that is our second type, close filter breakout. So what is close filter breakout? Okay. Okay. This is a support. Price is putting pressure. Suppose price is putting pressure, okay, and suddenly there is a close here. But you are not entering here. You are waiting for a clean candle beyond the line of support. So you are only entering when you get a proper, you are not even entering here. You are entering when you have a close filter breakout. When you are getting a perfect close breakout beyond this level, you are entering here. Fine. So this is called close filter breakout. The pros. The benefit of such kind of entry is that you are taking into regard you are trying to neutralize. You are neutralizing stop loss hunting. There is something called stop loss hunting. I think many of you know, which we won't be discussing in this session. So you effectively you are safeguarding against immediate reversal of the market. Fine. Now the cons. This is a one of the I would say this is one of the pros. Now the con is that by the time you enter, you might have already lost some 30 to 40 points, and that's some serious point. See, by the time you got some confirmation, you decide to enter, you already lost 30 to 40 points. At the same time, in the pure intrabar breakout, if there was another guy called X, and he got an entry here itself. Suppose he got an entry here itself, he would be capturing this whole 30 to 40 points, and you will be entering only here. You will be only beginning here at around zero. You will be beginning here. By the time you are beginning, this guy would have made the fortune of the day. So that's the negative part of this close filter breakout. But this is best for daily or hourly time frame trades. While we discussed the pure intrabar breakout, that is good for liquid market in the small time frames, then this one is good for the daily or hourly time frame trades. So with that, we are moving on to the next topic. Not next topic, next type of the breakout. So next മൂന്നാമത്തത് Sorry, sorry for the language. So next, the next type of breakout is two bar breakout. Two bar breakout method. Before that, I must say this closed filter breakout is a conservative type. It's a conservative way of approaching the breakout. And this one is a confirmation kind of breakout setup. It's a confirmation setup breakout. While this is conservative, here is confirmation. That means one step ahead compared to closed filter. So what happened here is that, again, the same thing. Suppose this is a, okay, this time consider this to be a resistance. Okay, fine. Price is nudging the level. Then you got a intra-bar breakout. Then you got a close filter breakout. And after that, you are again waiting for one more breakout above the high of this one. That is called two-bar breakout method. You are entering only after you get a clearance above a close filter breakout. If you get a clearance above the high or low, low in the case of support and high in the case of resistance. So only if you get a clearance above the high or low of the close filter breakout only, then only you will be getting into a two-bar breakout method. And this is a confirmation setup. And you employ this kind of trades especially when, for example, when you are taking trade against the trend. For example, market is in constant uptrend. Suddenly it came down. It tried to go up. Okay. Then it again came down, again went up, then it's coming down. So in this kind of market, for example, in this kind of market where market is trying to reverse against a trend, there you can employ this kind of two-bar breakout method, just to get to the confirming, just to get the confirmation right. But the negative aspect of this kind of two-bar breakout method is that you are waiting for one more extra candle to get a clearance over the close filter breakout. So that means you are losing further points and your entry is very late. Maybe the momentum is lost by then. Market may come back to retest the levels. So it's like, though it's a confirmation setup, the entry at that point is not very much beneficial from a trader's point of view, especially in a shorter time frame. And the next one is point or percent breakout method. So from the name itself, it is very clear. You are only entering when market moves a certain point. Maybe it's 5 point, maybe it's 10 point, or maybe a certain percentage, 0.5 percentage market have moved to a certain side, to a certain direction, or 1% to a certain direction. Then only you are entering. I'm not a fan of this kind of entry because I don't. Maybe there are takers for this kind of entry. Especially this one is good when you are working in a range bound market. In a range bound market, when market constantly is in a sideways, this kind of entry. For example, there may be some pokes onto the side, then market coming down. Then maybe some pokes either side, and it's going up. So some fake breakouts keep on getting fake breakouts. Then in this kind of market, you can say that if market moves a certain percentage to either direction, for example, if it moves to this area, which is 0.5 percentage, then that would be considered as a breakout or something like that. So that is called point of percent breakout. There is nothing much more to add to that. And with this, we will be moving on to the next category. Then you have time-based breakouts. In time-based breakouts, you are doing nothing, but you are waiting on time. You're depending on time. You are depending on time to see if market is staying beyond or below a particular structure of resistance or support, and then only you are getting into the entry. For example, there is a breakout happened here. You see if market is staying there for a particular period of time, then you are confident enough to take a trade, to enter a trade. But the problem with this is that you never get an absolute best price entry. That's the problem with this kind of breakouts, and moreover your stop loss will be very costly, and your trade opportunities could dwindle if you are waiting for market to revisit to the level to make a very favorable price entry. Then probably you won't be getting any trade opportunities. So that is time based breakouts. Actually it is like very close to closed filter, no, two bar breakout method. It's like you are waiting for further candles to make sure that it is staying beyond the line of your reference. The sixth one is volume based breakout confirmation. So in this method, this is again a conviction trade. There are two types of trade, okay? Conviction based trades and anticipation trades. So this is a conviction trade. You're waiting on a candle or you're waiting on a setup to get some signals in order for you to get into a trade. So this is a conviction trade. Here what you do is that you only enter if the breakout is accompanied by a significant surge in trading volume. So trading volume is very important here. You are reading trading volume along with the breakout candle, and you are only entering if this trading volume satiates, if this trading volume meets certain criteria. Typically 50 percentage, for example, the trading volume typically 50 more than 50 percentage than the 20-day average. So if the trading volume is more than 50 percentage higher than is more than 50% higher than the 20-day average, then you would consider that as a good volume. So it is a reliable way to separate a real trend from a fake out. And the problem is that, for example, in certain derivatives market like crude oil and all, if you are basing your entry in the Indian market, Indian MCX, the volume may not be showing the real picture because you need to refer to the NYMEX and NYMEX for the crude oil volume. Then only you will get a real picture. And this is best for Nifty 50 stocks and indices where volume data is highly transparent. This method. So that being said, we will be moving on to the next method, which is ATR confirmation. ATR based breakout method. So in the ATR, it's similar to volume. The mechanism is similar to volume. You enter only when if price moves a certain area, for example 0.5 x of ATR and beyond the breakout level. For example, ATR method is something which I don't follow, but which is it there, and you are committing it to a trade only when for example, you use a buffer based on the asset's current volatility. Okay. For example, you only enter if the price moves 0.5x ATR beyond the breakout level. There is a breakout level. And if the price moves 0.5x ATR beyond the breakout level, then you are moving into that. ATR measures how much the price usually moves. If the ATR is high, you need a larger cushion to avoid being stopped out by normal market noise. It adapts to market conditions. For example, if crude oil is wild today, your ATR buffer will automatically become wider to protect you. It can result in a late entry if the ATR is very high, reducing your risk-reward ratio. It's best for crude oil as well, which is massive intraday volatility and frequent noisy movements, Then the next one is pivot point technique. Pivot point technique based breakout method. Here you use certain mathematical levels and you name them like R1, R2, S1, S2. They are calculated from the previous day's high, low, and close, whatever. And the mechanism employed is that a breakout is only confirmed. A breakout is only confirmed if it clears a horizontal line of support or resistance. If it clears a horizontal resistance or line of support along with the pivotal level, like R1 or S1. So not just the levels are broken, but you also make sure that the pivot along that level is also broken. Then it is taken as a confirmation. So that is a pivot point based breakout method. This is a combined method. It's a combined way of looking at the breakout. So that's all about the breakout methods. Now we will be moving on to the next topic, maybe in the next class, not now. So if you were to ask me regarding, we discussed quite a few, especially in the last segment, we breezed through them. If you ask me which one is good against fake breakout protection, which one is good as a fake breakout protector, I would say it is volume based breakout. So this gives enough protection against fake breakouts. At the same time, the pivot point based breakout, it gives least protection against the fake breakouts. This is good. The tier based, like it's like okay, it does okay work, but this one is pretty good volume based breakout entries. So that's all. Now we'll move on to next topic, which is chops. Maybe the next session. Okay, bye.